And everybody, it's Tim Reazor with Revere Asset Management. Let's see here, just before 3:30 on a Wednesday night. So very quickly, stock nerds, market lovers, before we get to Facebook earnings, a couple admin notes. I need to tell you by the end of this video, I'm going to show you it's the clearest, we'll just call it SS. It's the clearest selling signal I've ever have worked with, and it's back. And it works. I would say 8 out of 10 times, 9 out of 10 times, and doesn't mean it's going to work this time, but it's the clearest signal I get of selling. And every time I see it, I make sure to point it out, talk about it in depth, and help you understand what's going on there and why it works. So we'll do that again, but we'll do it by the end of the video. But very quickly, let's see here, the podcast from this week. So all our podcast issues are fixed. I like that. That is very good. That means if you're on Google Play, Apple, iTunes, you get it anywhere you get your podcast, and search for Your Asset, Your Money Radio, and you will in fact find us. If you want to see all the videos that we produce, all those podcasts in their in the form to which we shoot them with camera and sound and all the good stuff that we do. So right here are the insights, okay, the nightly videos that you're watching right now. Right here, just click the podcast tab at Revere Asset Management, Tomorrow's Insights, and you can see all the podcast, in addition to if you have already listened. If you're like, well, Tim, how do I get to the iTunes? Well, you can subscribe right here. Just click the iTunes button. It's all the way at the bottom of the page, and you can get delivered to your tablet, your phone, whatever device that you want. And you can even get that, I believe, on any other Android device as well. Okay, so with that, let me show you one other thing in case you want to get a hold of us. So if you're like, Tim, I'd like to email you. I get questions all the time from stock nerds and market lovers just like yourself. All you have to do is go to about strategy, and you can do two things here. You can see the portfolios to which we run in the shop, and you can get a hold of us. There's America's Fiduciary right here, Danny Stewart, by the way. Anytime you have a planning tax question, Danny's CPA type background, plus his acumen for stocks and markets make him the perfect person to talk to. We don't sell insurance, we don't sell annuities, so if you have questions on those, we can tell you. We give you the straight scoop on insurance and annuities. Those are not investments; those are insurance products. Always remember that. There's Don, and here there's me. There's Hunter. Hunter and Don make all decisions on the portfolios. If you have questions about the portfolios, what goes in them, what goes out of them, what is on the watch list, all you have to do is email those folks right there, and you can see my information. You see our little Twitter handles there. Some of you like to get a hold of us via Twitter, and I appreciate that. It's like we're texting buddies. It's not the formality of email. It's a quick text message. And what I've done on my Twitter feed for you is left my DMs open. So you can just DM me through the Twitter app. And it's like we're texting buddies. I used to give out my personal cell phone number all the time, and then it just got to be too much for me, so I defaulted to using Twitter and opening up my direct messages. So hopefully that helps. Now listen, stock nerds, market lovers, these videos, they are for what? Your edification purposes only. They're never ever to be misconstrued as advice. When advice is advice, seek advice, all you have to do is in fact give us a call. So let's do this. So let's look at Facebook. So we'll get to the sell signal towards the end of the video here, but let me show you Facebook. So Facebook reported tonight. So the expected move was plus or minus what, 26. So I'm kind of nonplussed by this. This is a big move, right? You're like, Tim, it's 174 to 200. And Tim, it didn't just capitulate lower like everyone thought it would. They're going to cut guidance. I don't know what the earnings call is going to be like. I don't know if it's going to be up tomorrow by the end of the day. Hell, by the end of the earnings call. No idea here. But look, clearly, whatever the market's trading off of right now, whether you think it's good or bad, it's up. And what it's up is just about the expected move. Okay, so if like Netflix was a 5x expected move, okay, Facebook is just at the expected move. So the market makers, the people that price options, they sell the calls and the puts that you buy, and then the institutions buy as well. Well, they priced in this $25, $26 move plus or minus. Right now it's at the upper range. Now, if it starts exceeding that, they didn't price that in. And that's where you get movement in the overall markets, whatnot. But this won't have an effect unless it starts really running higher or lower like Netflix did. And so that's Facebook. And we can look at this. Let me take off. You go to style after hours. Let me show you something like Microsoft MSFT, which propped up the markets today. So maybe you could say, well, hey, Tim, Microsoft propped the entire market space up today because it's the #2 Q stock and the Qs just didn't fall apart with some really serious ticks. Minus 1,500 today. Totally get it. Totally get what you're saying. But the expected move in Microsoft was what? So Microsoft went out yesterday at 270-ish. We'll just cross it out, 270-ish. And you can see it was up about 13, 14 points. That was much higher earlier in the day. But that plus or minus 19, we'll just round it up, that plus or minus $20, it's all within the expected move. And so that's why Microsoft isn't just running away. And what about Google? So Google yesterday, G-O-O-G-L, which reported, G-O-G-L, there we go. Google, which reported yesterday, is down, so we'll round it, right, up to 90, down 90 points. The expected move in Google yesterday was 194 plus or minus. And so the people making money in this earnings season right now, sans Netflix, are the people selling you those calls and puts. It's really hard to make money when I say they've priced it in, they've marked up every call and every put to account for this binary event that we call earnings. And so they're pricing in $194 of price movement through when? Through Friday. And so if we go back to our Facebook example, right? We go back to our Facebook example, and now it's up 201. It's at the expected move, right? We're up 26 points. So this is the move. And so we'll see what happens. A lot of people must be short Facebook, and they're covering their shorts, or it could be that great of a report. I haven't read too much into it, other than they're going to cut guidance and some numbers are off, but we'll see what happens tomorrow. Now, let's take a look at this market, right? Pretty bad. So let's go QQQ. And so it's really easy to go market bad, but you need to see some things to hinge off of, because what you're going to start seeing is, hey, market's oversold, right? Market's down too much. And here, let's put this on a daily chart. We're looking at the QQQ, NASDAQ 100, and you can see we are now, here is the Feb, you're looking at the Feb 24s, you're right, the little lower Marches, and you're looking here. So we're right at that level. Can we get lower? We can always get lower. I don't think it helps to look at a daily or a weekly chart in this regard. I think it helps to look at a monthly chart. And I'm not 100% sure the moving averages are your friend here. I think what you need is an ATR chart. And if you want to understand the importance of these ATR charts and how to use them, allow me the opportunity to please show you this. So if you go to tomorrow's insights, I apologize, clicked on the wrong thing. Tomorrow's insights at Revere Asset, I covered this ad nauseum. It's probably the best I've ever done in covering the average true range for the firm. And so how do you explain ATR and keep an audience awake at the same time? Yeah, it actually was pretty exciting. And then Don has his way of using the ATRs to talk about risk and position sizing, and that's super interesting. And I think it's a really good resource for you to watch, and you can actually download it and save it. If you're having trouble with that, let me know. Back to the ATRs. So where are we on this QQQ ATR? So here is the monthly mean. We've breached that, and it's normal, whether it's a daily or weekly or even a monthly, to come down occasionally and test the -1 ATR. The last time we did it is when? COVID. And the last time we did it before that was when? The last time we raised rates. Remember that 2018 period where Jay Powell going to raise rates, and then Jay Powell backtracked, said, no, we can't do it, and the markets were like that, and then COVID hit. Remember, there's a monthly chart. Yeah, I think we can get down somewhere close in the zone of the -1 monthly ATR. That kind of makes sense to me. Are we on that trajectory? Well, tomorrow's going to go a long way to seeing if we're on that trajectory. Could Apple and Amazon save the markets tomorrow? We'll find out. They report tomorrow afternoon. So a lot of this, you just have to wait to see how some of these earnings are interpreted. And maybe this is the path we're already on, predestined, and it really doesn't matter what Apple and Amazon do tomorrow. Although I think it does, since Apple is the number one weighted stock in the NASDAQ 100. But what about SPX? Let's take a look at SPX and where SPX could be traveling to. So, and I'll show you the sell signal here in a moment. But look, this is down here. This is like 4,100, 40.50. You're currently at 41.83. So I think there's another 100 points left in the S&Ps to come down and find some really solid footing. Another 100 points in the S&Ps. Well, Tim, that doesn't sound like much. I mean, we've been pretty volatile. Well, remember, one S&P point equals 8 Dow points if you speak Dow. A lot of you speak Dow. I know that a lot of you don't speak S&P and can't do and don't think about the correlation. Just give you a sense of what you would expect if you got another 100 or so points to the downside in the S&Ps. Where's that on the ATRs? Oh, where's that 4,000 40.50 put you? It has you breaking the mean down here, and it lands you like right in here, somewhere right below the mean, into this zone of support. And so if you want to know how to use these ATR charts, I can't encourage you enough to go back and listen and study that podcast that we did from just this past weekend. So, and if you have any questions, then absolutely email, call any one of us. Our phone, if you're on a connected device watching this, all you do is go to the phone button, touch it, and it'll dial us. You'll get Danny. You'll get Danny right away. And so you can obviously always reach out via Twitter or email as well. Okay. So that is the two indices I think you need to be paying attention to. But what also does this hinge on? So I mentioned that I've got a sell signal. So I'll show you that I'll show you that in a second, but let me show you the dollar. So the dollar is putting so much pressure on stocks. This is a monthly chart of the dollar. You can see we've reached December of 2017 levels. Here, let's get this to a daily chart. And this is, I mean, clearly extendable. So, well, how can you tell us extended? I explain by using what? The ATR charts. I explain that in the podcast, but this is extended, not just to the naked eye, but there's a couple other reasons why it's extended. And so you can see that it starts to pull back. I'm going to show you this on a 5-minute chart. When the dollar hits a high, so when does the dollar hit a high today? The dollar hits a high between, it starts moving to a high. Right here is a pop to a new high at 9:30. And then it goes up from 9:30 up about 15 or so more cents to 10 o'clock. Let me show you the relationship here. How about QQQ? So the dollar hits a high for its first high at 9:30. And at 9:30, what were the Qs doing? Hitting the low for the day. And a few moments later, when the dollar, the Qs recover, the dollar spikes again. What does it do? Yeah, they come back again. And so there is a relationship between stocks right now and the dollar. The higher the dollar goes, presses up against highs. And here's that 9:30, first time the dollar hits a high. And then the dollar releases a little bit, and then it keeps going higher. And it stops moving higher around that 9:55, 10 a.m. And once the dollar stops moving higher, look at what stocks are able to do. They're able to, find some peace a little bit, right? Relent from the downward pressure. And so, look, as long as the dollar is pressing highs and remains elevated, stocks are going to find trouble. And maybe this weekend on the podcast, I'll talk about Japanese yen and how that all correlates into what we're talking about here at Revere. But I promise you the sell signal. So let me do this. Let me get this. Well, I've got it on SP. Let's change to SPX. And I'm going to show you the sell signal because it's important that you see this for yourself. And we've done this in many podcasts and on the video. But right now, this is the VIX futures, not the People's VIX, the cash VIX, just the VIX is the VIX futures, professionals trading, the choice of professional traders everywhere. And so right now, the current May contract, which has plenty of days left on it, is pricing out higher than the June contract, and that contract is pricing out higher than the July contract. And so even with today's kind of real end, where NASDAQ wasn't down much, S&Ps were green, Dow I believe was green, you're still seeing major risk priced in with the VIX futures, and it wasn't like that. This just happened. And so, well, what do you mean, Tim? Well, if people are using the VIX for protection, and this contract only has, let's say 20 days left on it, or 15 days left on it, it should cost less than a contract with 49 days, and it should sure as hell cost less than a contract with 84 days left on it. But it doesn't price out that way. It costs more for protection right now. And that tells you that professional traders they're very concerned, and they're saying risk is here, risk is now. And it most likely all hinges on tomorrow. But the last time this occurred was 17, 18 February. And so that is what, 6-7 days before the invasion of Ukraine. Now let me show you that on a chart here. So here's 17-18, and it's a Friday because we did the podcast and I talk about it on that very podcast that week, and that the VIX is like the very last thing I covered, I believe. And even though, I mean, the market was just awful, right? Just not a good thing. Breaking the 200-day, like this little zone right here, this is where the VIX inverted. It's where the VIX inverted. And that's another 6 or 7% down in S&Ps. It's about another 9 or 10% down in the Qs. And the VIX inversion, man, it signals. I've only seen it not work a couple of times. Doesn't mean it's going to work this time. Tomorrow could be a rip-roaring bullish day on the markets. It's telling you something here, though, that the people are spending more money right now to buy protection with the VIX futures, with a contract that should price out cheaper than it is currently. And it's exactly what happened here. And just because it happened here doesn't mean it's going to happen here. I get it. We're already at these lows, and that's kind of why I showed you the SPX and the QQQ on the monthly average true range charts, because those charts are the ones that are coming after next. And those are the levels I think you want to look at. So hopefully that all makes sense. And let me just, if you want to go back, you can go back to any of our podcasts. Like, Tim, I want to hear that. I want to hear you talk about that. Prove it to me. We never take anything down. And we don't look at it as being right or wrong. We look at it as providing you tomorrow's insights based on our experience with the charts, the price, the truth, not thesis or philosophy. What is what are the charts telling us? And so you can go back all the way to every podcast we've ever done, and you could see, let's see, one day trading event, Bodemore, it's somewhere in here. So it's not that old. It's only a couple. I hit load more, but I don't see more being loaded. So we'll have to figure out why that's not working. But let me see here. Huge actual moves in bearish market. Let me see if that was it. 390. I should get a date here. Oh, March 5th. So we want to go back. February 25th. And so we'll go back just one more. It's going to be this one. Stock destruction. Yep, this is the episode. So February 18th, you can hit play and talk about at the end the VIX inversion right there. So hopefully this all helps. And if you have any questions, never ever hesitate to get a hold of us. You can always just go to the general contact us page. That goes right to Danny, and he will email you right away. So with that, Stockings, market lovers, I love you. I always am grateful for you supporting the work we do here. And so with that, tomorrow's the podcast, those in the know always know that the podcast gets posted Friday afternoon, super early, so you can always watch it. You watch it via our YouTube channel or right on the website. And then just one last look here and it gets me emailed out Saturday morning, right there, Facebook at 2:01. So pressing up right against the expected move high. So with that, I hope you have a great night, and I will see you at the next update.